Canada's Auditor General released 5 new reports today looking into matters that include programs to assist seniors, the Canada Summer Jobs Program for young Canadians, digital identities, and the Canada Emergency Business Account, otherwise known as CEBA, a program that Karen Hogan says compromised the value for money Ottawa shelled out.
EDC failed to exercise basic controls in contract management, such as monitoring whether amounts paid aligned with the work performed.
Well, joining us now is the Auditor General of Canada, Karen Hogan. Karen, thank you for being here.
Thanks for having me.
So listen, let's begin with CEBA. As you noted, a $49.1 billion program rolled out during the pandemic to support small businesses. And in terms of the federal agency, we're talking about the Export Development Canada. However, they outsourced to Accenture. Conservatives have expressed concern about that. How did giving this program to one outside company essentially compromise public dollars?
So one of our main findings was that Export Development Canada handed over too much control to Accenture, and they were allowed to set sort of the terms of contracts as well as the pricing for certain tasks. There was heavy reliance not only on hourly based contracts, which typically means that you will pay for even cost overruns or delays versus having a fixed price contract, but that handing over all that control means that you didn't make sure that the federal government was going to get information back in a timely way. And we just shouldn't see business like that, relying on all these non-competitive contracts to one vendor.
Non-competitive, although we did hear from both the Finance Minister and the Minister for Small Businesses. They put out a joint statement in response to your report. And this is what they say in part. This report fails to properly acknowledge that CEBA was designed and delivered during a global pandemic. Within less than 2 weeks, the federal government stood up new emergency support for 898,000 small businesses across the country. They go on to say that the response was historic. How much leeway is a government allowed given the circumstances of the moment, again, at the height of the pandemic?
So I think our report does a great job of balancing what we found. We talk about the positives of exactly as you mentioned, getting $49 billion out to almost 900,000 businesses across the country. Most of those businesses received that funding in less than a month. That is a huge success story. What I would have expected, however, is while at the start of the pandemic, you might do things differently or quick, and an emergency is a reason to go non-competitive. But after a period of time, especially in a program like a loan program that you know is going to have a big, long tail, that you would have seen the government transition to more competitive or more controls. The most recent contract issued in 2024 was a non-competitive contract. So I would have expected that the government would shift to more prudent ways of procurement and make sure that they can optimize value for money. And we're just not seeing it in how EDC managed the contracts.
So this is more than just CEBA. This is just general practices that you'd like to see changed?
I think generally the government usually goes competitive first, right? But there is exceptions, and that exception during an emergency made sense. If we try to put ourselves back into 2020, there was a lot of uncertainty, and it made sense that in order to have speed, that sole sourcing was used. It makes sense to use vendors when you need surge capacity. But after a while, the federal government needed to figure out how to transition that back in. And here they just locked themselves in to be tied to Accenture till at least 2028.
Okay, and lock themselves in. And you go on to say that you're bothered, I guess, by the fact that there doesn't seem to be a lot of enthusiasm to recover the billions of dollars outstanding, because this was essentially a small business loans program. The vast majority paid back, but there's still billions outstanding. And what, you're seeing a lack of enthusiasm?
Well, you're right. 91% of businesses that receive funding were eligible. There's about $3.5 billion that went to ineligible recipients. And while some of that, about $2 billion, was identified by EDC, businesses were notified. Only half of it's been collected. What concerns me is the other $1.5 billion that we identified as being potentially ineligible. EDC is only partially agreeing with our recommendation, saying we don't have the policy direction to identify whether or not these these businesses are ineligible and recover those funds. And I'm concerned that there is a lack of enthusiasm to want to recover funds that went to ineligible businesses. I would expect the government would want to do that, or at least say we're going to forgive some of it and be really transparent with all of Canadians.
Okay, so problems with CEBA still. Let's move on now, though, because you also bring it about an issue with OAS. You're concerned that there's not enough analysis being conducted around old age security to what? Secure its future, that it might grow out of control?
No, it's more looking at whether or not old age security is meeting the needs of seniors. If you think about what the program is there for, it's meant to help ensure the financial income security of seniors across the country. There's 3 layers to it. There's the basic old age security payment, then there's a guaranteed income supplement and an allowance. And all of those are added on depending on how low your income threshold is. While there's lots of analysis around the government the guaranteed income supplement, the basic old age security payment that so many seniors receive isn't being analyzed to determine whether it's sufficient to meet financial needs. So for example, it's adjusted by the Consumer Price Index to reflect inflation, but very little analysis done on whether seniors are experiencing a different rate of inflation than a general household, which is what the Consumer Price Index represents.
Now, would that be too costly, though, to do an independent analysis?
Well, there's analysis done on the guaranteed income supplement. This is about looking at the basic payment. When you think about the fact that there's 7.5 million people today who are over the age of 65 in our country, Statistics Canada predicts that's going to double in the next 20 years. And for the first time ever, there are more people over 65 than under 18. So now would be the time to do that analysis to know what kind of money is needed to support seniors, not just today, but into the future.
Okay. Well, CEBA and OAS, just 2 of 5 reports that came out today. We have the full news conference on our website, but for now, Karen Hogan, thank you for this.
Thank you.